All right, ready to start and then folks in?
Yeah, you can let people in, it's fine. Hello, everybody. Welcome to the webinar. We'll be starting in just a moment. Hi, Tahir. We got Patrick. Welcome, everybody. You've got also live streaming on, hey, George, nice to meet you again. We're also live streaming on YouTube. If something happens to your connection, it's also simulcast on YouTube. So wild and woolly day. I usually make most of my money when most people are jumping out of windows, and today was no different. So we'll kind of plow into that. Maybe that was a bad joke, but you know, you have to be forewarned. I'll just wait another 30 seconds. Ross says CPI was crazy today on YouTube. Not to me. You know, this idea of a Fed pivot, not going to happen. I think we're going harder and stronger than anybody's going to realize. I was short, and again, I don't trade based on the Fed or CPI or anything like that, and I'll talk about that in a moment. So we have over 100 participants, so welcome. I'll give this another moment, and then we can get started. All right, why don't we get cracking? So welcome to this live 3-day trade execution webinar series. This is a live event. This is real time. We'll be talking about the markets, which are now closed, but this webinar is live. I've kind of subtitled this How to Capitalize on Monster Moves in the Markets, and also simultaneously avoid the market traps, which is perhaps more important. My name is Mark Shawson, the pattern trader. For those of you who don't know me, I'll just kind of give you a brief background on my trading journey. I started more moons ago than I care to remember or acknowledge. I was a young lad in college, and getting an education at one of the best business schools in the country, the University of Southern California, otherwise known as the University of Spoiled Children. So I was going to business school at USC, taking investment courses, finance courses, and learning how to evaluate investments based on what we call fundamental information. Fundamental information is where you take a company or a commodity or whatever you're looking at and look at all of the fundamentals of that. You try and look at supply and demand with a company, you look at balance sheet, you look at price earnings ratio, you look at earnings to sales and things of that nature. And right around that time, my father was doing business with an investment banker by the name of Graham Loving. Couldn't make that name up. Graham was a really idiosyncratic character. He had an eye patch on one eye. Very, very smart guy. And by day, he was trading actively trading the commodities futures markets, cocoa and live hogs and cattle, soybean oil, pork bellies, T-bond futures, gold, silver, platinum, orange juice, cocoa. He was trading like 30 different markets all at one time. And these were really exotic markets. So I figured, well, how could you get to know one market, never mind simultaneously juggling 30 markets? And, I quickly learned that Graham didn't really care to learn about the markets. In fact, learning was counter to, his strategy, which was really just looking at the price movements and basing his entire trading based on the movements in the price, up or down. He used to say, Mark, I simply want to buy a market that's going up or sell a market that's going down. And to my really ordinary way of thinking, that just really resonated with me. And so this started me embarking on this journey of what we call technical analysis, the exclusive analysis of price. So I make bets, hundreds of thousands of dollars, millions of dollars, exclusively just based on what I'm looking at, a picture on a page. This is available to everybody. I don't have any special knowledge or any information. It's just I've learned to build a methodology based on my analysis of price action. And that's what I hope to share with you over the next couple of days. I've got a 4-step layered approach. I actually, before the webinar, put a PDF in the chat box. And this will kind of orient you to the major price patterns that I look at. Turns out there's all kinds of scientific evidence behind what I do. I thought I just evolved this over time and somehow it worked. And then I assigned our team the task to see, hey, is there any basis to this? And we found out that there are all kinds of scientific studies that show you once a pattern is started, it usually goes for 100 days in a trajectory once that pattern has been consummated. Not in a straight line, but over time. And so that strategy is in the chat box, freely available for your use. So what I'm going to do today is actually go into the live markets and share with you in real time what I'm looking at, what I did, why I did it, win, lose, or draw. And then over time, hopefully you will get some kind of basis and familiarity, and we can take it one step at a time. So, I always share with you what, I'm doing in the market now. This is not a demo account. This is, real as a heart attack. This is my real money. I don't know that you could find a demo account that looked like this. This is my personal account statement. Today, I have a huge position, 1,100 put options. Now, put option is a bet on a price decline. And these put options were in the Dow Jones, the ETF, the DIA. So for those of you who live in a cave and don't know what happened today, the US stock indexes got punished. The stocks were down 6%. I think the NASDAQ index was down 6%. I think the Dow Jones was down about 3.5%, down 1,200 points after the CPI this morning. Now, I don't care about CPI. I don't care about the Fed. I don't trade on news. I trade on price action. Now, you'll see that I started putting this bet on almost a month ago. Now, that's a long time for a short-term bet. Now, these put options expire in about a month, October 21st. So about 5-6 weeks from now. So I bought myself plenty of time. They're still out of the money. It needs to go under 30,000 for me to make money. But I started buying these put options about $1.50, and you can see they closed about 3 times that. So I'm making 300% on my money, over $500,000 in this, put position, which is a very crazy bet. It can go and be worthless in about 4 seconds. And that's, a lot of money just to throw around. But I had a very specific reason why I put such a big bet on. I'll tell you a little bit more about that. I also have a short position in the stock Moderna, mRNA, 5,000 shares short. I think it was down, whatever, $10 today or something. I also have a put position in the QQQs. I bought these Qs yesterday for about $2, and today they closed at 12. So I'm up 600% 400% in one day on this put position. Again, a put is a bet on the decline. It's a leveraged way. You can see it was up 435% just today. So I actually got rid of half this position and kept the other half. And I've got $90,000 in this very leveraged bet. And then I've also got some put options in ExxonMobil. So, I've got a few dollars, thrown in the market here, all on the short side, betting that the market's going down and will continue to go down. And I will kind of talk about that, in a moment. So these are these DIA options. I bought 1,100 of them. This is just a few of them. And you can see I started buying them at $1.60, $1.51, $1.65, $1.83, about a month ago. And I did this based on just a pattern that I saw in the markets. I shared this pattern with our members. At the time, we have a community website. I published that pattern. I have been very unabashed about how bearish I have been and maintain to be in this market. These are kind of emails that I send out to our members over time. So this was August 28th. So about 2 weeks ago, kind of said, the beatings will continue until morale improves. I said, this is my sarcastic take on Powell's recent comments. He's the Fed chairman, of course. And I said, the Fed is going to have to almost kill the patient in order to save it. I said, stock markets are likely going to plummet. So this was 2 weeks ago. So how did I know today was going to come off the boil? Well, the markets told me that a long time ago. And here was, all the analysis. I also, at that time, recommended selling the New Zealand dollar, Canadian dollar. I'll discuss that trade also. And, that trade is now also working in my favor. This was another email, I think a week or so ago, and it was called Growth Undertow. I said, it's over, meaning the market. I said, I expect earnings for S&P 500 companies in the next quarter to start to drastically decline. In the current month of September and beyond, I foresee a massive decline in the major indexes and individual stocks. So this was 10 days ago. So before the Labor Day weekend. So I have been consistently beating the drumbeat, of a lower market. This is FedEx, which, is much lower, and on. So this is what I do at the Pattern Trader: analyze major patterns, major moves, get our members in ahead of the major moves. These are my FX trades. My big bet is on the New Zealand dollar, Canadian dollar. I also have a short position in gold. And right now, these are open profits. So they can go up, down, sideways. These are my positions. And that's what, we're doing here. So this was the New Zealand dollar, Canadian trade setup that, I sent out August 24th. Said New Zealand dollar, Canadian dollars form several bear price patterns on the daily and weekly chart time frames. I said, I think it's worth jumping in at current levels. Patience should pay off being short this pair over the longer term. So, I've been in this pair for almost a month, so that's a lifetime. Most people trade FX, in and out 10 times a day, hold it for, 20 minutes at a crack. They look for 7 pips here and 15 pips. I look at the bigger patterns that lead to much bigger moves in the market. And it's my thesis that unless you do so, you're very unlikely to be profitable over time. Day trading, trying to steal 7 pips here and 15 pips there is not going to work. That's not my opinion. Look at the statistics. Over 90% of people are losing their money. And I think it's because people have too short a time frame. They're trading on too short a time frame charts, and their expectations are just too small. So here was a follow-up. I said, I'm already short. I'm taking an additional bet. This was, on the 28th. And again, prices in New Zealand dollar, Canadian have continued to plummet. And those are my open profits at the moment. This was a bet in gold a few weeks ago in June. I said sell gold at 1800, 1801. I also said sell silver at the same time. And I ended up making up a boatload of money, 257 on this position, 199,000 on this one, lost 28 grand, etc. So I made a boatload on that move lower in gold and silver. This was dollar yen. I've been telling our members that dollar yen is in a once in a decade kind of flight here. I told our members to buy it at 117, and now we're 3,000 pips higher, or 3,500 pips higher at 142. I think dollar yen goes to 150. So here was my euro yen buy, and there was a few bucks made on that trade. So these are the kind of trades that, I make in the market, that I send out. All of these trades I've sent to our members over time. And, this is what I do. So I'll kind of go over what I've been doing in the markets recently, why I've been so bearish, and why I, made such a big bet on that Dow Jones position. So, I look at the longer term time frames because I want to take a piece out of the bigger moves in the market. So you can't really do that if you're trading on a 15-minute chart. This is a monthly chart of the Dow Jones Industrials. This is one of the major indexes in the United States. And it's a monthly chart, which means that each one of these price bars represents 1 month in time. And hopefully you can appreciate that, a monthly bar has much more truth to it, if you will, than a 15-minute bar. And so, again, what I try to do is look at the trends and the patterns. So, it always, starts off, I look at a chart, I open up a chart, and I, say, is, this in a trend? Or is there, a pattern? Is it, is it reversing? So in this case, we have had a huge uptrend for many years in the US stock indexes, really since 2009, 13 years or so of unending bull market, which, I think is going to come to a crashing halt. If it hasn't already started. So, like I said, I look for either a trend of, I try and deduce what is the phase or the condition of the market. And this has been in a bull market, but I've seen a series of patterns, bear price patterns, reversal price patterns. And by definition, a reversal price pattern is a pattern that once you see it, it then suggests that the market is going to go in the other direction. And so again, I look at, one, the phase or the condition of the market. Then I try and determine, is there a chart pattern that is directing traffic? Meaning after the pattern is formed, the pattern, indicates what the trajectory is. Then once I see the pattern, I look for what I call my insurance day bars. Now, this is a monthly chart, so this, in this case, would be an insurance monthly bar. And so I call these in insurance bars. And this is my little coinage, my little slogan. And the reason why I call these insurance bars is because once you see them, it kind of tells you how to get in the trade, where to get in the trade, how to join, the momentum, how to join the energy, and also how to assess your risk. And there are really two forms of this bar. One is what I call a key reversal. This is where, momentum goes one way, and then by the end of the bar, it closes the other way. So this is, in my mind, what I call a key reversal bar. Made a new high. By the end of the month, it closed on the very low, indicating that this was likely pointing Sometimes the market actually points to where it wants to go. And to my mind, that bar was already pointing to where it wanted to go. And the information today just took us to where that was already pointing last month. So this is evidence of how price is ahead of the news. Price is a discounting factor. Price is the truth. So just to finish up, this analysis, the other form of an insurance bar is what I call an inside bar. And an inside bar is where basically the price sits one within the other. So you can see that basically this month, the high and low was kind of within, the range of the previous month. And to me, these are coil bars. They're building of energy, and then the energy unfolds in the direction as indicated by the prior pattern. So I'm kind of going through this pretty quickly. I'll kind of, give you our strategy in a much more digestible form in the next few days. I'm just going. And then, so once I kind of understand what's the phase, what is the chart, then I drill it down to my inside bars. And then I either put a sell stop. So I'm always looking for the market to confirm what I'm looking at. So if I see this key reversal here, basically I just put a sell stop below this low, and then the market the energy just puts me in that trade, and then put my stop loss somewhere outside this risk so that I can stay in this trade for a big move. And then if I'm looking to buy it, it would be the opposite. It would be put a buy stop, and that would be above whatever the range is. I'm looking at a daily chart above the high of the day, a weekly chart above the high of the week, and in a monthly chart above the high of the month or below if I'm looking to sell. So what really alerted me to start buying these DIA puts. Now the DIA is basically just an ETF that tracks the Dow Jones, just to be clear. So I started buying put options. Now put option is a very leveraged bet on a decline in whatever instrument you're buying a put on. You're betting that this thing is going to go lower. This thing will accrete or gain if a market goes lower. And the reason why I put on such a huge position, I basically dumped $250,000 in these grenades of financial weapons of mass destruction. I mean, these things mainly end up worthless. So to dump $250,000, $500,000 in these things seems crazy, but I felt I was looking at a very formidable, a unique price pattern. So I saw that basically there were really two patterns that were forming in the Dow Jones, reversal patterns. One was kind of this V top. Now both of these you don't really see very often. So it kind of looks like the roof of a house or something like that. So that is a top. So once you see this pattern, it's a topping pattern. And by definition, a topping pattern is if a market's going up, if a market's topped, it's going to go the other way. And by the way, I don't think this is going to be an exaggeration. I think you're going to see one of the biggest down moves, we've seen in a long time. I've been saying this for a long time. Now, again, the only thing that leads me to believe it is a series of patterns that I'm looking at across all of these indexes. And by the way, this is all I look at, right? So you'll see that this is what I call a clean or a naked chart. So, there is no moving average here. There is no MACD. There's no Bollinger Bands. There's no volume. There's nothing on this chart but price and time. And that's why we call it a naked chart, because it doesn't have any indicators at all. I am just looking at a chart like this and either trying to get aboard a trend or take advantage of, a reversal in trend based on my observation of these chart patterns. Now, the other pattern that I saw was this odd looking pattern that looks just like a diamond. So I didn't draw that correctly, but whatever. It looks just like a jewel, one of these patterns that, something you'd see in, this is it's called a diamond. And this too is a reversal pattern. So you can see this is where I started telling our members, when this is trading at 33,000, I said, when this starts bumping into the underside of this diamond pattern, I'm going to start buying these put options. And, I started buying it here and then here. And I thought, okay, the market's going to stop. And it kept going up and up. And, I just kept on buying more and more in my conviction that I was looking at a reversal pattern. Then finally, the market switched and had this huge key reversal. You can see it went higher by the end of the month. It was on the low of the month. And now you can see we went higher over the last couple of days, and now we're back to the low of the month, and I think headed much lower. So today I probably made $500,000, and I didn't close my position out, and that's just crazy, right? But I think there is a lot left on the table. I put this position on for a purpose, and I think I could make 7 figures from this position. That was my intention. So again, that whole bet, crazy, reckless, call it what you want, was just based on the observation of a pattern in the market. And that's what I look at. To me, patterns equal trajectory. How it's going to get there, why it's going to get there, what time frame, these are unknowable. But the pattern tells us. Once the pattern is set, the table's set, the menu's set, and I don't care what the Fed does, what the the CPI said. This market started topping out in November and January. So price is ahead of the news. So whatever was happening here, is dictating whatever happens going forward. So to me, didn't know the CPI, didn't know what the Fed would do. These are all unknowables, but the market is ahead of the news. The market is a discounting mechanism. The market is the truth. The market is always right. Now, those sound like cliches, but that's the principles that I live and die by. And I make a ton of money looking at the objective truth in the market, which is only price. Everything else is conversation or bullshit by some analyst who doesn't know what they're talking about, or the market is the only truth. And that's how I live my life. So Jay says, is there still room to get in the trade? This thing hasn't even started. I don't think people have any idea how far this is going to go. I think that's what we could be looking at. I think this is going to be a magnitude that is going to just blow people away. So I'm in it, and I have not taken profits. I'm up 300% on my options, and I'm not. I'm going to see this thing out. I want to be in this. I want to see the show. I want to be in it through September and then October, and see what happens here. Jason says, would I short into a DIA rally? I would certainly short into a DIA rally. Like I said, I don't think it's even started. So, the next support is this 29,000, and then there's kind of nothing underneath there. So, we're in kind of a free fall. So that's the Dow Jones. We can look at all the indexes, and they have, different types of patterns. But, there's 3 different bear price patterns that I see in the S&P 500. And here you have the key reversal price action. We made a new high for the week, and now you're on the low. It's only the first day of the week, but or the second day, what have you. But I think there's a good chance this is going to end up on the low part of the week. So this is the S&P 500. This is another one of the huge probably the most mainstream US index, the most followed around the world. And again, we had a market that, was never ending since 2009, going straight up based on central bank money printing, what have you. And now I think the chickens have come home to roost. The party's over, and there's going to be a price to pay for all of this reckless economic stimulus and spending. And so what I see within the S&P is 3 different bear price patterns. This is the first. It looks just like an M top. This is a double top where you go to 2 peaks. And then when you look back and it cuts through this neckline, the neckline is simply a line that's drawn through the pattern. It's this M top. It looks like the letter M. It's called a double top, where you have prices go to, the same area twice, back off. And when you stand back, you have this big bear double top. And with the word top in it, it means that the market has topped and will eventually go in a lower direction. Now, also within the S&P, we see a very odd looking pattern called the ascending broadening triangle. It's called ascending because throughout the pattern, prices are going up. It starts life in the pattern narrow and then widens or broadens out at the top. Now, this is also a reversal or negative price pattern. And what we know about the ascending broadening price pattern is that it typically retreats back to the origin. So I think 3,400 minimum is the objective. But frankly, markets typically overshoot. And I think this will go a lot lower than most people are anticipating. So we have a combination of the double top, the ascending broadening. You can see how prices break out. They retest to the dime. I mean, right to the lower level there. It retested that. And now it's retreating. And then once it takes out this low, it's just confirmed that it's game on. And so all day long, I listen to these, numbskulls over here saying that the June lows were put in. And I don't think so. So I think we're going to go into a free fall here. So, if you're, in mutual funds or stocks, be very, very careful. I've been warning our members to get out of stocks since last November. Now, the other formation is this kind of megaphone top. Looks like a coach, yelling through the sidelines. And so, within the megaphone top, you see kind of this double top. And so, again, I think we're coming to the lower level of this triangle around this 32 to 3,400 level. And I don't think it will stop there. You're going to see significant bounces along the way. And that's the thing with bear markets. You get these enormous rallies. I think we've had 5 rallies of over 9% this year, where the market just rallies like a mother, but eventually it just always makes a new low. And that is the nature of a bear market. Everybody gets excited, then it makes a new low. Get excited, new low. Get excited, and I don't think this one's going to be any different. So this is the nature of the bear markets. If you look at the depression, I don't know what they were, 11 rallies of over 15% during on the way to losing 80% of its value. So it's very tricky, these rallies. They look very convincing. I mean, how this market went straight up for 8 weeks in a row, didn't have a downtick. And you say, well, you just feel like every day it's going up. It's got to be a bull market, sucks you in. And then that's what you're looking at. So I have been warning our members not to get sucked in, that the real move was lower. And I have been shorting stocks like Moderna and, dozens of stocks, dozens of indexes, and having a party, taking advantage of down moves. Now, most people in the stock markets are buy and hold. They don't have this mentality. And there is more money to be made in a down market than an up market. Gravity does work, and markets fall a lot faster than they go up. So I think we're in for another precipitous So Randy says, every time I think Mark doesn't know what he's talking about, we have a day like today, and then I think he's the man. So this is the struggle of running a public business, which, I hate. This is why I, thought over many years whether I wanted to start the pattern trader, because the markets don't do things symmetrically. They don't go in a straight line. It's all about patience and commitment. And, when, things don't seem to be happening to me, I can make all of my money in 6 weeks of the year. So it's a very different way of looking at it, but I'm always looking to capitalize on the big moves in the market. I want pieces of this. I'm not looking to punch it out with my broker and day trade, on a 15-minute chart. There's very few people, I think, who can say they survived that kind of strategy. I look to make money, and big money, by taking out chunks of moves. And the only way you can do that is by looking, but it doesn't happen every day. It doesn't happen every week. And so there's this expectation that, wow, if I haven't seen results in 3 days, this guy is, full of, what. But it doesn't work that way. The market takes time. It's patience. It's like those surfers you see at 5 a.m. The water's calm. Why are they all out on their boards if the water's calm? They're waiting for that big wave to take them all the way to the beach. And they might have to wait 2-3 hours for that one wave to take them to the beach. And that's what I am. I got involved in these put options a month ago. And finally today it's, yielding fruit. And that's the discipline. And there's just no way around it. Tahir says, I'm new to investing. How do you invest in a market like this as it's going down? Well, Tahir, in this case, I bought put options, which is, I don't suggest for anybody new. You can lose all of your money, but it also limits your risk. So whatever I put in the middle, that's my total risk. You can also do what's going short. In the stock markets, it's a very different mechanics than the FX market. FX, you want to short euro yen, you're short euro, you just sell rather than buy. In the stock market, there's a mechanics behind it, but your broker does all of that. If you want to take advantage of the decline in stocks, you can see that I am short. I'm betting on the decline of, where is this? So you can see that this little negative sign here indicates that I'm short. It says I'm short 5,000 shares. So Moderna dropped $10 today, and I'm short 5,000 shares. So I made money while it's falling. Most people say, okay, I'm going to wait, for the market to go lower, and then, I'm going to buy. I take advantage of the decline, and when it gets to a bottom, then I'll buy it also. So this way you can have your cake and eat it too. And most people will just ride a thing into the ground in the hope of one day it's going to turn around. I don't do that. So you can see, another way is to buy put options. I've got a put option on ExxonMobil. I've got a put option on the QQQs. These are bets, on the decline. So there are various ways to take advantage of decline, and depending on where you are in the world, I have a thing where I can do short trades on derivative instruments on my MT4 also. So there are many ways to take advantage of a decline, but the first thing is to realize what is going on here. And we've been kind of hypnotically programmed that stock markets always go up. And that's why so many people are going to lose so much money. I have been warning since the beginning. By last August, I said we are going into a market environment where you're going to see the largest destruction of wealth in our history. And I thought it was yet to happen, but it's already happened. There's a graphic somewhere I have where if you total both stocks and bonds, usually they don't go down together. We've lost $15 trillion worth of value just this year. And I don't think it's even started. So I've been warning our members since last year, go to the sidelines, get out of your mutual funds, go into cash, go into a survival mode, because I think what is going to happen is going to be beyond anybody's imagination. I always say to our members, try and use your imagination and forecast how low this is going to go. And I think the market will exceed your expectations. So, you know, be forewarned, the patterns are in, pattern equals trajectory. Now, how far it's going to go, where it's going to go, when it's going to go, those are somewhat unknowables. But, you know, I use the markets, you know, I use these key reversals to understand where to get into a trade and where and how to assign my risk. And this is the principles that, you know, I advocated. The pattern trader, these are the emails that I send out every day, where to get into a trade and how to put your stop loss. So how would you trade the SPY? You can actually go short the SPY, Tim. SPY is the ETF that tracks the S&P. You can go short. You can buy puts. There are, you know, a number of ways that you can do that. But for the purposes here, I'm just kind of giving you a window, an insight of how to evaluate markets where you don't have to rely on anybody. You don't have to get on TV and listen to these forecasters. I mean, you know, on TV, everybody's pushing something and hyping something. So there's always some, and most of these guys are on the buy side or predicting that, you know, the lows have been put in and they don't understand or see what's coming. And, you know, again, I don't pretend to, I'm just looking at a picture and interpreting what this picture is telling me. And it's not good. So that is what I'm looking at in the stocks. I'll move to kind of another asset class and show you why I've been looking at the New Zealand dollar, Canadian dollar. Again, you know, I've been short. Here are my New Zealand dollar trades back, you know, a month ago. I started telling out, and again, this is where I will sit in a trade for 3 weeks, 3 months. I've sat in trades for 13 months in FX, and I know that is kind of crazy to most people, but this is how I look to position myself to capitalize on the big moves in the markets. If you're trying to, you know, dart in and out like a squirrel hunting for nuts, you know, 7 pips here, 11 pips there, you're not going to be successful. You're not going to be able to outlast your broker. So, you know, here was the first sell at 80.25. Here was another sell around 79.95. And now this market is at about 120 pips lower. And, you know, it's, you know, looks like it's going to go much lower from here. So sometimes a market de-risks itself by virtue of the maturity of the pattern, by virtue of the time. And the more time a pattern is put in to developing, when it happens, the bigger the payoff and the less the risk. So we're looking at a pattern that really effectively has been forming for 9 years now. So that is one hell of a mature pattern. And that's why I typically don't trade some of these exotic currencies, because you can see that it's really a boxing match. I'm not really interested in sideways markets. You know, to my mind, there's three main conditions a market can be in. It can be an uptrending market, a downtrending market, or a sideways market. Now, having said that, to my mind, there are 2 other conditions, and this is where I make most of my money on the turn. This is where a market is either turning up and then goes down, or a market that is going down and then ready to turn higher. So these are basically 5 different conditions in the market, and I will trade all of them except that. Remember, my objective is to take a piece out of moves, some kind of move. I don't want to bang it out with my broker, trying to guess where the next 30 pips are coming from before it turns in my face again. So I'm always looking for moves. So we've been in effectively a 9-year trading range with New Zealand dollar Canadian. But I think, we're starting to break the lower end of the support level of this trading range. And I've been alerting our members to this opportunity for a while. And so within this kind of sideways moving thing is that I see several bear patterns that are indicating a much lower trajectory in New Zealand Canadian. So this is a market that's been going higher. But then there was a pattern that indicated that this up market was going to turn. And that pattern was right there. This very simple double top. So if a market has topped over time, it's going to go lower. Now, in addition to this double top, we have what I call complex head and shoulders. So head and shoulders looks just like a man or woman's left shoulder. The peak is the head. And then we have the right shoulder, and it looks like a man or woman's head and shoulders. And that also is a reverse price pattern. So usually prices leading up into are going higher. Once the pattern forms, it's a reversal, indicating that prices are going to go lower. So now you have what I call a complex head and shoulders, where there are a number of shoulders on both sides. But whatever way you look at it, this is a huge head and shoulders distribution. So for 8 years, people have been bailing out of this currency, and now it is ready to go. And so to my mind, there is like no risk. This thing is, spent 8 years kind of duking it out. And now you've kind of broken below these levels, and there's just nothing in its path. I mean, this is just an open field. Where it goes, nobody knows, but it looks like it's going to go a lot lower. So I expect to be in this trade for weeks or months. It's like, why get out? So this is what I look for in my trading, but this took 8 years to develop. So, people who are, get nervous after 3 days where they don't see results, it's just, unrealistic, and that's not what I look for. Raymond says, if the smaller time frames can change on a dime, why can't the larger time frames do the same? Is it because it takes a long time to change, and by that time you chance? So, again, this is staked out for a long time. This is just a whole distribution pattern. Distribution meaning that people are getting out, and that's versus accumulation where people are getting in. And so you can see this thing now is broken below the neckline. The neckline is simply a line drawn through the pattern. And that just confirms now the green light's on, it's ready to go. And, this thing broke through the lows here. And so it's basically confirmed. I just put on another trade today. I just sold more at the market today. So I've actually put a third position on, and I just think this is just a no-brainer trade. You can close your eyes, and I don't have a stop loss. I shouldn't advertise that. I do not have a stop loss. You can see here's the reversal. Made a new high, close on the low. So these reversals point in the direction they want to go. You can see there were 2 reversals right here at the highs. Made a new high, close at the low. Made a new high, close at the low. Made a new high, close at the low. So I look at a pattern, and then I look at the price action within the pattern. And in this case, it basically double confirmed it. And so this is game on. And I feel very comfortable by saying to you guys, just close your eyes and get in here. What's your suggestion for a new investor trying to grow a small account? Sell or buying puts? Denise, I would not do options if you're new to the market. Options are very, very risky. You can lose 100% of whatever you put up very, very quickly. So my suggestion is to take very small positions and look to grow. The tortoise wins the race. Every time you try and accelerate it, you're going to burn your account out. So take a small position and look to grow your account over time. But what I try and do is look for the bigger moves that you can take a small position and camp out in something. And this is something you can just camp out in, Denise. Just put a small position on and let it work for you over time. You'll wake up 3 months from now or 6 months from now and be in I think a pretty good position. And that's really the key, is patience and waiting for the real moves. Duking it out, day trading based on 15-minute charts using some kind of wave or moving average or what have you. I don't know too many people are successful doing that. What is the minimum account for trading big moves? So again, a lot of people, I think, Sebastian, misinterpret that. I say if you're going after big moves, they feel like, wow, I need to have a big account in order to do that. That is not the case. Tomorrow, I'll talk a little bit about risk management and position sizing. But a 1% risk on a $500 account is the same as a 1% risk on a $5,000 account, is the same as a 1% risk on a $50,000 account. It's 1%. And most people don't understand this concept of position sizing, risking 1% of your account and no more on each trade. So, if you have a $10,000 account, that means you shouldn't risk more than $100. So it doesn't matter if you have 5 losing trades in a row and you lose $500. Big deal. You've lost 5% of your account. But most people are betting too much on each individual trade, and their expectations are too small. And this is the huge problem. So, I'm in this trade and I've got 120 pips. Now, most people never see 120 pips trading FX. I got in up here somewhere, 80.25, and now it's, 125 pips lower. It's not really a big move. But most people are never seeing a trade where they're looking at 125 pips. I don't take an FX trade unless I see a path to make 150 pips. I will not do that trade. Typically I will risk 50 pips to make 150. So that is a 3-to-1 risk reward ratio. Now, most people are trading in and out for 7 pips or 10 pips or 15 pips. And then if they're trading for 15 pips, they're usually risking 15 pips. And this is a 1-to-1 relationship. It actually gets worse because now you have to pay the spread 2 to 3 pips or 5 pips on something like this in and out. So now you have to make, 20 in order to risk 15 just to have a 1-to-1 relationship. And if you have a 1-to-1 relationship where every time you bet, and your outcome is the same as your risk, you have to win 90% of your trades. Now, I can't do that over time, and I don't look to do that. I'm not looking to be right on every trade. The thing is, if you have a 3-to-1 risk reward on your trade, you can actually lose 72% of your trades. So it's a myth that you have to be right on a majority of your trades. If I told you I only win 4 out of 10 trades, you think, well, who's this guy? He's like nonsense. But it's the quality of your wins versus the quality of your losses. I'm making 300% on my DIA puts. I'm making 600% in one day in my QQQ puts. I bought my QQQ puts yesterday for $2. Today they're 12. That's how you make money in the markets. You have to have a bigger outcome, but that doesn't happen every day. And so most people, if they're not getting those results, then they Jones out and they, flip out. And so, I waited 3 weeks for this trade. And it's not over by any measures. What's a small position? So to here, obviously position size is based on your own individual account size, and your account size is based on your own individual net worth and capacity. So, but you should not be intimidated that you can't be in a, in a big move if you have a $2,000 account. You just have to take a position size that is commensurate with your account size. So I'm going to probably leave it off for today. Greg says, how often do these trades happen? Would love to quit my day job, become a full-time trader. Are these patterns trade sustainable? Yeah, so look, I look at many different asset classes. I trade crude oil, I trade gold, I trade stocks, I trade indexes, I trade FX. So there is always something happening somewhere. There's always a bull market somewhere. And that means even if, something's going down, I'm looking to short it and taking advantage of that. So there is always something happening, but sometimes the markets will grind until they resolve. So if you have an expectation of, trying to hit a home run every day, it doesn't work that way. I look to find these special little opportunities. Could take 3 weeks, it could take 3 months, and then I could make all of my money in 3 weeks. So, but there are always trades, there are always opportunities. What I try and do at the Pattern Trader is educate our members how to look for these opportunities, how to kind of sort the BS from the real, how to sort, out these, short covering rallies. So the last 5 days, the NASDAQ went straight up. And I was advising our members not to get caught out in that. You can see these bull market, these counter trend rallies, they suck you in and they don't let you out. So if you get short here, you can see 1, 2, 3, 4 days straight up, not a downtick in 4 days. And that's how I usually know it's a short covering rally. It's BS. That's just not sustainable. That just, got you by the, and so here was this little pattern right here. Here was the bear pattern. And basically this thing just rallied to the breakout of this bear pattern. And now that's the real pattern. So you kind of have to realize what is real and what's not. I always look for what I call the governing pattern. Now, sometimes we see little patterns like this double bottom here that leads to these, good moves. And, believe me, I will hop on what I call a counter trend rally. This is counter. So to me, I consider this to be the main trend. These are counter trend rallies. So my objectives on counter trend rallies are very different than being in position now to take advantage of the main trend. So, within this main, this downtrend, there were all kinds of patterns here. Here's the double top, head and shoulders. Here's another head and shoulders. These are patterns, within the trend that tell you what's really going on. This is just BS rally. Carl says, I'm from Ireland, would love to get involved trading with your help. How can I move forward with your program? Set an account with a broker. I've dabbled trading unsuccessfully over the past few years. So thank you for asking, Carl. At the end of these 3 days, you'll get a little thing from our team asking you if you want to join our elite program. This is the highest order of what we offer at the Pattern Trader. I don't offer it on my website. It requires an invitation and for you to speak to a team member. Carl, you can always contact our support team. I'll put that support at thepatterntrader.com. So, but, after this webinar series, you'll get an email asking if you want to join our program. I'm not here to sell you anything. I just give you the information and, you decide if you want to, take this to the next step. Shane says, how do you identify potential trades among thousands of stocks? That's always an issue. There are tens of thousands of stocks. And, you know, I just go through a certain process where I look at health, industry, I look at real estate, I look at, you know, different stocks from different things. And it's, you know, very difficult. Sometimes it becomes a question of choice. Right now, I think you can just short the market. Everything is going to go down. I think today, of the NASDAQ 100, all 100 stocks were down. In the S&P, every single sector was down. And in the Dow Jones, every single Dow Jones stock was down. So it doesn't matter what you pick. And this is what I've been saying for a long time. When this market comes crashing down, there's going to be nowhere to hide. You know, the only place to hide is in treasuries, get 3.5% on cash. And, you know, that's probably the safest place to be if you don't want to short stocks. Other than that, I'm just betting on that. Carl says, thank you. Appreciate it. I'm impressed already. Appreciate that, Carl. Is it possible to go with you on trades having a lower balance than $5,000? Absolutely. Tortoise wins the race, Armo. You got to start somewhere. And like I said, just bet 0.5% on your trades. 0.5%. So if you have $5,000, my math is terrible. What is 0.5%? 25 bucks. So 0.5% is bet $25 on a trade. And if you lose 10 trades in a row, you've only lost 5% of your account. Most people are betting too much. They're betting 3-5% on a trade. And so, you know, on 10 trades, they're down 50% on their account. So if you just bet 25 bucks a trade, build over. Armo says, thank you, I got it. Laura says, how can we get into the short? Do you think there'll be any kind of retracement tomorrow, or is it the beginning of a free fall? Yeah, I think yes to everything. I think you can short rallies. It is a free fall. And, you know, so what I try and do is try and find areas where I understand risk reward. And the problem is once things start going into free falls, then it becomes more and more difficult, right? So I try and find very, you know, small pockets where I can understand, you know, where the risk reward is. This is kind of a funky chart, but here again, I try and break it apart. This is a downtrend. This is a bear pattern within the downtrend. So this was not a shock that you broke down out of this pattern, you retested the breakout, and now you're going in the direction as indicated by this pattern and this trend. So now the problem is you say, well, okay, and most people will then get into this thing and put an arbitrary stop loss. So I'm going to put here, I'm going to get in here, and I'm going to put a stop loss there or there. But it's arbitrary. It's why, what is that, the significance of that? This could still go up and still go down. So now it becomes, I try and get in when the energy has built. I started buying these QQQ puts yesterday. I'll show you. I don't like to say anything without backing it up. And so I try and short into strength and buy into weakness. See if I can find this real quick. May not be the best use of everybody's time. Yeah, here it is. So I dumped 40 grand into these put options that expire at the end of this week. A crazy bet. 40 grand. This was yesterday. So here was buy to open. 150 of the triple Qs 305s. And the triple Qs were trading about 310 at the time. So this had to go 500 points just for me to kind of, get to the strike price. And I dumped 38 grand in this thing. Now this thing went to 12 today. So I made 10 times my money in a day. 6 times my money, sorry, 5 times my money. So this thing closed at 11 something, almost 12 bucks today. I bought it at 250 yesterday. So, Wayne Gretzky, the famous hockey player, once said, when he was asked, some commentator said, Wayne, you're not the strongest guy out there. You're not the fastest guy out there. How in the world do you score all those goals? And he said one of the most profound things that to me applies to lots of life, but especially to trading. And what Wayne says, I don't skate to where the puck is. I skate to where it's going to go. And so how did I know it was going there? Because this guy told me that. This guy, this trend. So the more strength this started accumulating, I just started selling into that strength. So sell into strength, buy into weakness. So Jean-Louis says, thanks for the session. I think you changed the way you usually do your session, and it seems to be an improvement teaching about the methodology and the theory. Jean-Louis, I kind of wing it, so thanks for that. Tandarai says, thanks, Mark. That's some profound knowledge you gave us. You're welcome. Thank you, Mark. Needed you back. Hope you had a blessed vacation. My mentor, aka Jesse Livermore. Thanks, Eduardo. I appreciate it. So I'm going to end it here. We'll pick it up tomorrow, 4:30 Eastern Standard Time. Kind of check in, see what's happening. I do expect a continuation. I think there's lots of volatility, and you could sell those rallies. I'm short, and I think that this down move is going to have a lot more legs than people imagine. Thanks, Raymond. Thanks, Lori's. Thank you. Mark says, today was the best I've seen from you. Thanks. So like I said, I'm hostage to the market, and that's the thing. I can't, invent things. I surrender to the will of the market. I go when the market, gives me the signal to go. And it takes some patience and discipline. So Ace says, will there be any live trading tomorrow? So all these trades are after the markets, the live sessions, but I'll show you what I did on my account, and it probably won't be greatly different. I'm short the Qs, I'm short the Dow. I might just start legging out of the Qs at some point. I want to keep those Dow puts for a while. I mean, they expire in October, and I do think this entire month will be a huge down month. So this is where you look at the time frames to put things in perspective. Sometimes when you look at the longer term time frame, so you can see it's very noisy on the daily, and then a little less noisy on the weekly, and then a lot less noisy on the monthly. So this is how, you try and contain your, so I do expect there'll be a lot of excitement, there'll be a lot of opinions, there'll be a lot of back and forth, but I do think by the end of the month, this thing will be on the ground, that it'll be down here. But, it could go up 500 points tomorrow morning. But by the end of the month, I think we'll be there. So, and then the month after, who knows? So that's the key. There's just going to be a lot of noise in this area, back and forth, lots of excitement, what have you. I'm looking to stay the course and, make a big bet, on the outcome of this thing going lower. I hope so, Mark. I try and be. Thanks, Mavis. Take care. All right, Dwight, thanks very much.